I want to bring in, and we were talking about this just a moment ago with Jim Frischling, because really, Jim, instead of being more on the equity side, you've really been focusing yourself now on fixed income. So a different strategy for you recently.
Well, and the theme we're going with really has to do with cash. So getting, whether it's coupons or in the case of stocks, getting dividends. We feel that, again, as I mentioned heading into this segment, you can't avoid risk assets right now. You have to find a way to deploy your money. We'd like to recommend folks try to take a longer view. We feel in this minute-by-minute market, there really are no natural holders of these products. So the fact is, we're asking folks, take a look at your needs, take a look at your portfolio, use these kind of dips to rebalance. Some of the fixed income, I guess, asset classes or sectors have to do certainly with the mortgage space, whether residential or commercial. We look at certain muni opportunities and revenue-producing bonds. Again, we like the idea of getting cash. We're trying to tell our investors to reduce leverage, and at the end of the day, somewhat keep it simple. You need, 3-4% yielding opportunities, and maybe a little better than that in this environment. We think that's attractive. So it's not going to light up everybody. It's not the sexiest time to be deploying capital, but the fact is, invest in assets that are going to give you cash on cash.
Okay, but if you talk about munis in particular, we talked about the issue and the topic of munis yesterday. There had been a fear that states and cities and local governments in particular weren't going to be able to get their fiscal houses together. But now, if you look at muni bonds, and we're showing this versus 10-year treasuries, we're seeing somewhat of an inversion, and I think you can see this chart. But how do you interpret this, Jim?
Well, I agree there is a lot of stress on the muni markets, and there's been a lot of talk about just how draconian that market may perform. The fact is, not all munis are equal. The muni investors used to rely on bond ratings and bond insurance, and those things really are less important today. So now it's basically picking the right munis, and actually the states and the localities are doing a far better job kind of cutting back on their spending and I guess taking some pain than admittedly the federal government's doing right now. So we don't dislike the muni sector. We actually think you just need to be selective and make sure you're investing in credits that are going to actually pay you back your money.
What about private-public partnerships? I mean, it seems like, besides Solyndra, it seems like, there seems to be more of a move now to restore the idea of a public-private partnership, because the government can't do it alone and the private sector doesn't seem to want to do it alone. What is your view?
It's a great point, and it's something that we believe is one of the road, or maybe to help put us in the path to recovery. That's something we need to see more of. Right now, the divide between Washington and Wall Street it's pretty ugly, and we think it has to happen together. If you look at the mortgage space specifically, we think the idea of let's have certain write-downs take place, but let's have an equity participation that if the loan were to recover, if the property were to recover, let the bank that took the write-down, let the government agency that took the write-down participate in the upside of that loan.
Dustin, my favorite, one of the ideas that came from the administration over the last month was why don't we have the government actually buy up foreclosed homes, refurbish them, and rent them out, so the government can now be a landlord.
Well, if they handle that as well, they handled Solyndra. We know how it'll turn out. Do we have time for me to ask Jim a question?
Absolutely.
Right, Jim, we were talking about the long term, and you were talking about one sector that's going to rebound eventually. We don't know when, but is the financial sector. Yes. How do you stay in that sector now and not be exposed to what's going on in Europe?
Well, it's a great question. Look, the litigation risk facing the financial sector is certainly something that's dragging on it. The regulatory reform is a drag, and then obviously the exposure right now to Europe is large. So I think at the top of the show we were talking about Morgan Stanley's lighter than expected exposure or less exposure to certain areas. I do think you have to be selective, but the fact remains is the financial markets, these banks are going to be the grease that gets this thing. Sorry, grease is in the lubricant.
Yes, I understand. There's a bad choice of words, but we understand what you're saying.
Watch it, yeah.
Sorry about that. It's going to be the lubricant that actually fuels.
Yeah.
Let's call it the fuel.
Well, that's my point, is that there is a long-term future for these, but you got to be careful what you're doing right now.
Correct. And I believe that when it comes to the U.S. banks, there are going to be some pillars. Bank of America, Citigroup, Wells Fargo, JP Morgan. Yes, those are the pillars that are going to help bring us back. So if they get too cheap.
It's interesting you say that, because I was looking at the Dow 30 and thinking, okay, again, I mean, it's a flat day, but I mean, a leader is Bank of America. Look, the stock is down 51% over the last year, so it's not like it's, some big performer. It's not. But at the same time, what you're saying is that JP Morgan, Bank of America, these are the ones to watch.
Absolutely.
Almost too big to fail, which came up
almost too big to fail. And again, I think they're very needed to bring us out of the road to recovery. I also think the housing market, we will not have a recovery without fixing the housing problem. And to fix the housing problem, it does need that public-private partnership, and it's these banks that are going to help bring us out of this. So again, watch that sector, because that's the sign when things are going to get better.
Dustin, B of A they deal with 1 in 5 Americans in this country.
It's good. to your point about the public-government partnerships, it will be about refinancing these mortgages, remodeling them. It's not about, building or the government owning housing. It will be restructuring these loans. It's the only way out of this, but they've got to figure out some formula in which to do it and then do it right.
And there's a lot of demand to deploy capital in this space.
Yeah.
But given the gridlock that's taken place and the moratorium.
But what's the incentive? I know we have to run, but what is the incentive, though, to get the banks to, I mean, they're not willing to take the write-downs that they have to make because they've got to answer to shareholders who are already punished these stocks. And Bank of America is a perfect example of that.
But it's so much more preferable to restructure than to foreclose. And we've seen after a year of foreclosures going down, they're back up on the rise. Last month, from July to August, foreclosures are back up on the rise. That's got to be terrifying to the banks. I'd much rather restructure it and maybe take a little haircut than lose it altogether.
Well, we'll get you some Bank of America stock. It's only $6.28, Dunstan. It's actually a deal right now.
Please, get me some Bank of America.
Pretty cheap. At least not $1. All right, coming up, let's focus back on the markets before we let all of you go out of the noon hour anyway. It has been a wild week for the markets. A lot of that volatility, of course, has been tied to Europe, the European banks. Having said that, everybody, those European banks actually did close today to the upside. I know that Jim has been kind of switching his investment focus a little bit more towards the fixed income side, but the contrarian in me says, wait a minute. If stocks are down to these levels, maybe if I cherry pick and buy equities, this will pay off in a year from now.
And again, we are telling our investors and advising clients that this is a time to look at your portfolio. And as far as equities are concerned, we do think buying, again, good companies, good dividend-paying stocks, particularly those right now that have distribution channels throughout the emerging markets, is a very good place to be, but with a longer-term outlook.
Emerging markets comes up a lot, Dunstan, but at the same time, and this is something that had been bantered about and rumored about even a week ago, was a Euro TARP, basically, that the ECB, the Eurozone, is going to have to come in and basically do a TARP-style bailout of their banks. Yet, if you look at those banks today and you look how they traded and how they closed, now we don't need it.
Well, the question is, do they have the money, and where are they going to get it from? They're going to have to get it from Germany. Is Germany going to accept the terms? And again, it gets back into that political conundrum of a North versus a South, and it's a really deep divide. I'm not sure where the answer is.
I think the hole in Europe is too large.
It is.
For
Germany to handle.
Because
Angela
Merkel has lost a lot of credibility politically because of her support of Greece. I mean, she basically cannot at this point back Greece
anymore. Well, she wants to go along with sort of the political conventional wisdom in Europe is that we have to do something. But the German people are saying, yeah, but not on our backs. And it's a very real, visceral problem, and I think much more imminent than what we're facing here in the United States.
I don't see how they pull a rabbit out of a hat and actually restructure or solve the European debt crisis without there being real loss. So Greece right now is the focus.
A default. You're talking about a default to Greece.
You lend someone a little bit of money, as you and I were talking about, you control them. You lend them a lot of money, they kind of control you. The terms recently offered to Greece just don't work. So either they got to default or you got to restructure it.
Well, I have to tell you, we're going to, of course, be watching the markets through the rest of the afternoon here at Fox Business. I do want to thank Jim Frischling and Dunstan Pryal. Thanks to both of you for joining me this hour. It's been great to have your discussions and your points. And again, foxbusiness.com. Yeah, that's where your piece is up there. All right, Lori.